Back to Market on Close. Let's talk some bonds. Cooper Howard joins me, Director and Fixed Income Strategist at Schwab's Center for Financial Research, to prep us for the week. Cooper, in your world of bonds, will the Fed move the needle? We're at 100% like market odds of cuts, so I guess to some degree there's some pressure.
You know, I think what they probably will do, Oliver, is they'll probably lay the groundwork for a cut in September. I'd be highly surprised if they do cut at this upcoming meeting this week, but I do think that they'll sprinkle in a little bit of nuggets as far as that they do plan on easing rates later on down the year, with probably September being the first rate cut. Now, my expectation is that the meeting minutes themselves, or excuse me, not the minutes, the statement probably won't change too much. There might be an additional kind of note here or there as far as gaining further confidence that inflation is easing more to their 2% target. I think the other thing that will be important to watch, Oliver, is if they make any mention of employment. So we know that Chairman Powell and other Fed officials, they have been commenting that the labor market's coming into better balance. I think that that gives them cover to cut rates. So let's see if that's noted in terms of what's said in the statement or potentially what comes of the press conference.
So what would you expect them to say to kind of lay that groundwork for August then? So they want to kind of like alley-oop it to themselves. They're going to kind of throw it up, get a nice bounce, come up in August and try and slam it down for a September cut. That kind of the right path?
Yeah, I love your reference to basketball, especially during the Olympics and following up on Team USA's win from yesterday. So
there you go.
I appreciate that one. See, Ryan Reynolds has nothing on you, Oliver.
Hey, you weren't supposed to hear that.
Speaking of the Fed, though, so getting a little sidetracked there. Yes, there is another event in terms of what the Fed is doing to alley-oop it to themselves. I think what they might lay the groundwork for is saying that inflation is coming closer to their 2% target. So they have been laser focused on that. I think also we've seen in the past that Chairman Powell, when the expectations are for a Fed rate cut, he's really slammed the door on that. So I think also what will be notable is what he doesn't say. So if he doesn't slam the door on it, I think that that's something to listen to as well.
Okay. So as long as he keeps it open right now, then we keep hope alive. GDP last week was pretty good, but generally the data have, over the last quarter softened. So it doesn't seem like anything that's come up from the economy recently should deter them from feeling like they're making progress, right?
You know, so far so good in terms of the path of rate cuts. You're correct that in terms of GDP, that does suggest that things are trending along okay. So maybe they take a little bit slower or a measured approach to cutting interest rates. But if we look at their two mandates, employment and inflation, we're starting to see some cooling in the labor market. That's coming better into balance, like I mentioned earlier. And then inflation, that is trending more towards the 2% target. I think looking ahead, yes, we do have the Fed meeting on Wednesday, but we also have the employment report on Friday. I'd be surprised if that does anything to really move the needle one way or another in terms of what occurs in September, because there just won't be enough data between that employment report and September for them to kind of build the case that we've seen enough data. They don't want to overreact to just one single data report, I believe.
Okay, so we still need the next month of data to go well. We need one more to really lock it in the Fed's mind, you think?
Yeah, I don't necessarily think one more to really lock it in. I think that you'd have to see a lot of things really reverse course and go the opposite direction of what the Fed is looking for. So long as we continue to see things going okay, employment coming into better balance, inflation trending a little bit lower, I think that even if inflation trends sideways, I think that that builds the case for a September rate cut. Now, if we see a surge in inflation or a significant drop in the unemployment picture, then maybe that changes the calculus for the Fed. But again, I think that you'd have to see kind of a big event occur for that September rate cut to be off the table at this point, Oliver.
Right, you had to be off the table. Got it. Okay, yeah, you have to have something huge. All right, now thinking about this week as far as kind of earnings impact the credit markets, we've seen a pretty good kind of shift in appetite for credit on the riskier side, on the kind of more cyclical side. Does that mean that is that rate cut dependent, or do you think we see any kind of credit moves on earnings this week?
You know, I don't think that it's rate cut dependent. I think really the story in the credit markets right now is low spreads. and just that lack of compensation for taking on that additional credit risk. So I think that that's something that's really the story in the credit markets right now. I think that is probably a demand side of things, is that given attractive absolute yields and kind of the outlook that maybe a soft landing is in the picture, it appears a lot of investors are comfortable taking on credit risk, driving those spreads down low. So I think that's really the story of what's happening in the credit markets right now.
Okay. All right, Cooper, thanks for the thoughts. Good setup thinking about bonds for us. Appreciate that very much.